So today I'm talking with Matt Spoke from movesfinancial.com. And Matt, thank you for coming on today.
It's awesome to be here, Steve. Looking forward to this.
Yeah. Me too. So I guess let's just start off with the real basics of, what is moves?
Yeah, sure. Without giving the full backstory, because we don't want to be here 2 hours talking about it, but it's a company I started about 2 years ago, right before the pandemic in February of 2020.
Okay.
And effectively the premise right off the bat was we wanted to build a product that solved financial problems for gig workers. And so it wasn't, initially it was a process of like first discovering what are the financial problems that gig workers are facing on a day-to-day basis. What are some of the like annoying frictions that they go through as they work to earn a living? And then it's sort of evolved from that, which we'll talk about, what Moves is today. We have an app in market that people can download on iPhone and Android. And also like what we sort of aspire to become. We're building out a whole bunch of new stuff that really focuses more on like building out a community of gig workers that are really capturing ownership in the gig economy. So the long-term ambition is, can we make gig workers owners in the gig economy in a way that really gives them back some of the economics that have been generated? But we can walk through that in more specifics.
Yeah, I'm definitely interested in the path to that for sure.
Yeah, sure. It's
I mean,
a
I'm sure.
lofty North Star, but we're making some big steps in that direction.
But so, okay, when you started and to where you are now, kind of the same as before the show when we were talking about like, how I had an idea for Rideshare Rodeo podcast. It got flipped upside down into something that never even was supposed to be. And then it since has evolved to what it is. I love it. And it still never hit what it was supposed to be.
It's always evolving, right?
But it never even ever got to what I was trying to make. It was such an odd process. So I'm just kind of interested into, from where you started to where you are now, and
yeah, totally.
What your thought concept was, and then where you are today with what's being offered.
Yeah, sure. So I think what's more and more clear to me as I build out this company is that we're very, very crystal clear on like sort of the aspiration. The steps we need to take to get there are steps that we have to discover along the way, because when we're talking to gig workers on a day-to-day basis, we're discovering issues that we didn't necessarily know existed, or we're discovering new pain points that we then want to solve. And so, the steps along the journey are definitely like things that we co-develop and talk to users about, and sort of put prototypes in market and see how they respond to it, but all with a view towards like longer term ambition. So I think there's probably two areas that we're focused on. So the big aspirational outcome that we're hoping to change is, I think it's a shame that the gig economy has developed in a way where tons of value has been created. Hundreds of billions of dollars of value has been created by companies like Uber and Lyft and Instacart and others. And effectively none of that value has landed in the hands of workers that have put in their, hours and blood, sweat, and tears into these markets. So first question we asked ourselves is like, what could the gig economy look like if gig workers actually owned a share of that market? How do we get there? I mean, there's a whole bunch of steps that we'll sort of undertake to do that. So that's sort of the long-term ambition. In the short term, it was more around, hey, what are the challenges and obstacles that on a day-to-day or week-to-week basis gig workers are going through? So the first product we launched on that front was a cash advance. And the cash advance product was pretty straightforward. It was saying, hey, if a gig worker needs to repair their car, and it's going to cost them $500, where are they going to go get that $500? They're having a hard time getting access to loans. They might have access to some family and friends that could lend it to them. Maybe there's some like, super high interest predatory like payday lender out there, but not a lot of great options if you earn your primary living as an Uber driver, an Instacart shopper. And so we started by building that. We've effectively evolved that product into a bank account for gig workers that spans across multiple apps that they might earn through. So, we saw that a lot of Uber drivers were using Uber's debit card, and a lot of DoorDash couriers were using DoorDash's debit card. But effectively, if you earned on more than one app, often you were getting your earnings deposited into more than one bank account, which just felt like an inefficient way to manage your money. So could we consolidate all of that into like a single bank account for gig workers, within which you can access this cash advance and you can see sort of a full picture of your earnings, And then from there, we started working on this stock reward thing that we'll talk about around how do we give like stock ownership back to gig workers in these companies. But that's sort of the baseline premise today.
So, I mean, just correct me if I'm wrong, obviously, but so are you're making the deposit into the banks?
So
Through
we effectively offer a bank account. We have a partner bank that we work with out of Virginia called Blue Ridge Bank, but from the perspective of our customers, Moves operates as a bank account. So you open an account with us, and you're being issued a debit card. You're being issued a Moves debit card. You have an app that has your expenses. You can move your direct deposits into that account. It's a fully insured, licensed bank account. It just happens to be that you're interacting with it through the Moves app. The first thing that we're getting users to do is they're connecting their various profiles from Uber to Lyft to Instacart to whatever apps they might use. We support 15 of these gig apps as a starting point, just to summarize their earnings. So if they have a single dashboard that says, did you know that last week you made $1,100 and 400 of it came from Uber and 500 of it came from Lyft and 200 came from DoorDash, for example. From there, if they want, they can open an account with us where we would then be like the account through which they actually receive their direct deposits and manage their spending.
So it's not somehow API connected through Moves where it's then facilitating it to a bank. You're actually having them start a bank account.
Yeah.
And then so switch within the apps the bank account that they want this money deposited into.
Yeah, and even that we've built sort of a way to automate that, where from within your Moves profile, users can effectively indicate, I want to switch my direct deposits, and then it automates it. So you don't have to go into your DoorDash profile and change your banking info. Effectively, Moves is going into your DoorDash profile and changing your banking info after you've given permission for that. It's the same way that we're effectively pulling data out of your Uber profile and your DoorDash profile to show you your earnings for the week and to show you like your historic patterns. And similarly, we can go in and like streamline the process of switching your direct deposits. So if you had 3 or 4 apps connected to your Moves profile and you wanted to switch all the direct deposits, you could do it effectively with one click instead of having to go through every single one of them manually.
Right. Well, I think that from our pre-talk that being with Para, I'm very familiar with a lot of this stuff you're talking about.
Yeah, of course. Yeah.
Because we I'm very familiar with Argyle and Solo, and I've worked with a lot of people that I didn't even know I'd ever be working with, and kind of those kind of things. But
there's a lot of really cool product innovation happening around this space, which is exciting to me because it means that over the next couple of years, it's just going to get better for gig workers in terms of the types of products that are available to them. Because there's a lot of people focusing on like, how do we improve the livelihoods of people who earn a living this way?
So I'm all for it too, as long as it is, my people that listen to the podcast know I'm about honesty, and then even though none of them do it, I'm about my goal is that everybody eventually, my wholehearted goal is full transparency on everything.
Yeah, of course.
Forever. I'm sick of this. Even if it doesn't pay good, be transparent, show the truth. So one of my questions obviously becomes security. And I also wonder how you're dealing with the DoorDash TOS, because you're now dealing with financials. You're going into we had a lot of problems because, we weren't allowed to, it's in their TOS that people can't share their info even with another entity to represent them to, I don't know. Yeah, I don't know if I just put that well enough in my looks to you. For those listening, I was kind of looking at him so that he'd know, what I'm asking.
The scope of the problem you're defining. I'll say we haven't had a similar experience to Para from that perspective. Probably primarily because the use case that we're building was not explicitly focused on like DoorDash tips the way that Para was focused early on. So there was a lot of attention that I think was driven from DoorDash to Para because of that specific use case.
Oh, it was.
We haven't been that granular.
You don't have to even be so polite. I can tell you wholeheartedly, it was straight up that.
I love it because I think
so do I.
I think change requires some like sort of controversial approach, right? Like if not, you're not going to like shift the incumbents to operate differently if you're not being a little bit cute in the way that you approach these things. So
Well, we had to come to the point of the conclusion of it's easy to talk.
Yeah.
Because
yeah,
we
exactly.
actually had to spend money on lawyers, and you probably
Totally.
are somewhat aware, David. So
yeah. So I mean, I won't profess to know all the problems we might eventually run into as it relates to our relationship with these companies. I'd say we have put a lot of effort into maintaining a productive and positive relationship with these companies because we think that ultimately they're the source of income for our users. And so we don't want to put that at risk by any means. I think we'd love to put more pressure on gig economy platforms to be more open and transparent. And, there's a certain amount of, maybe this is the cynical side of me, but I feel like they often want to have their cake and eat it too. Like there's, in the debate for AB5 that we were talking about earlier, Prop 22, they all wanted to advocate for the fact that they were just neutral marketplaces with independent contractors, like earning a living at arm's length. But in the same breath,
SaaS platforms.
Yeah, exactly.
They wanted to play that they were technology companies when they weren't, and then as soon as it was all voted on, and even Prop 22 was enacted, I mean, and then it was just like, no, we're just a rideshare company.
Well, and frankly, like I'm all right giving them a certain benefit of the doubt, but I think the trade-off has to be that if you're going to be this neutral SaaS marketplace for independent contractors, then the way that you manage the data of these workers should be different. The way that how many obstacles you put in front of them when they want to switch from app to app should be reduced. There are things that we experience on various apps. You've had experiences with DoorDash. We're having some experiences with Grubhub and Instacart that are just like inefficient, and they do it almost on purpose to keep users locked into their ecosystems, right? And so to me, that's not really behaving like a neutral marketplace of independent contractors. That's behaving more like an employer who doesn't want to lose their employees. And so I think that's a little bit of the like contention that will probably get flushed out over the next couple of years.
Deceitful algorithms.
Yeah. And frankly, I don't even think that it's, maybe I'm naive, but I don't even think that it's like intentionally malicious. I think it's two different parts of these companies. They're massive companies. I think there's one part of the company saying something, and there's another part of the company saying something different, and they haven't really connected the dots in their story yet. But it'll eventually have to get connected.
But there are instances I can tell you from my driving days. No, and this is different from delivery and everything else, where it's so, I mean, all of them are oversaturated, but where it's quite the same. Like if there's events going on here and I had worked 6 hours and I'm driving back home, I can't tell you that every time, if it was still busy, once I was a mile from home, I got a ping. They made sure of it. Don't go home yet. Don't go home. There was some very obvious, I don't even have to get into it, manipulation going on. And it wasn't forced. It wasn't a gun to my head. Clearly. I mean, this is still my decision.
Yeah.
Like, here's my point. Why did I still have it on driving all the way home if I had decided to call it a day? I should have turned it off. So there was something just waiting to tempt me. I don't know, but I do think that there is something going on that could even be like distance from your house. Like if he starts to get here, try and find him in order. I don't want to say that because I know that, they say exactly how their algorithms work and their proximity and all this and that and the other. But I do think there are times when that is stepped outside of. But yeah, so obviously,
so your earlier question though on security and like whether or not we're going to run into any conflicts with these companies. So on security, it's pretty straightforward from our perspective. We just work with licensed, regulated, audited entities. Like the bank that we work with is a fully chartered licensed bank. It's FDIC insured. It's
right.
So when we're issuing,
I have no questions on that part. And I think that people, I mean, if you want to keep telling them, but I'm sure that part's secure. I just question the TOS.
Yeah.
DoorDash saying that like we can't do something or you can't do that for somebody. And then it's being done, but it's like, then it gets into like, we were doing something different.
Well, and frankly, so, there's a little bit
you guys are just changing a bank account. So let's say even they knew, even though it's in their TOS, do they care? I don't know. Because they might just be going, listen, this company's just trying to help these guys better handle their money.
That's where we've come out with a positive framing when we talk to them, because we've spoken to every one of these companies. And we're able to say very simply, we're offering something that your workers can't get access to anywhere else. And that's a net benefit to not only your workers, but frankly, it's a net benefit to you because it's more likely that a worker is going to stay a gig worker for longer if somebody is solving their like basic financial needs, right? So if nobody's solving for these basic financial needs, there's more pressure for a gig worker to stop being a gig worker and look for a job somewhere else, right? So, and that ultimately leads to more costs for DoorDash and Uber having to replace workers that are leaving the gig economy. So, ultimately at the end of the day, we think our interests are aligned. For one, we own shares in every one of these companies as a business, and we've done that intentionally. But two, we want to see gig workers extend the years that they spend in the gig economy. And Uber and Lyft and DoorDash also want to see gig workers extend the years that they spend in the gig economy. So we're all working towards the same goal. We're just using a different set of tools to get there.
So when you're connecting your accounts to the, like, if people like me, like I'm on like 7 or 8 apps right now currently active, whether I'm using them or not, they're there. Can, if I signed up, can I just connect one and kind of feel it out before, what I mean?
Of course. And that's what a lot of people will do. A lot of people will come in and they'll, the first step is really just us organizing and summarizing your data for you so that you can see, your earnings across all the apps that you use in a given week. For example, we heard this pretty, simple but easy problem for us to solve was I'd like to know when I've made $1,000 in a week, or I'd like to know, hey, I have a goal of working until I hit $1,500. I'd like to know how I'm tracking towards that goal. I'm using 4 apps to do it. So, you can do the math manually, or you can just sort of connect all your apps and we'll just do the math for you effectively. But you could also connect one app, get a feel for the app. We support 15, as I said. A lot of our users will connect 2, 3, 4 is pretty common. We've seen a few do 7 or 8, but
I meant even like once I'm comfortable, I'd connect all 8.
Yeah,
I don't care, because I can see where there might be a benefit. I do other gig work. I work laser production shows and things of this nature, so more traditional stuff. I have a different way of doing my accounting. But if I was all gigs and this was working, just app-based on-demand gigs, I would probably, once I saw it working, put them all into there, because that's what would get you the best results. Because I'm imagining part of what you're showing is what people also get like on Gridwise and Stride and
as a starting
Hurdler and even Para. Para.
As a starting point, it's just like, how much am I earning? What did my prior weeks look like? I think that very easily evolves for us into helping you understand like your annual earnings and help you prepare for your taxes and help you do all these things that really require sort of a summary view of your work in the gig economy.
But you guys have a cool niche there, is that they're the first one that I know that's at least giving this tied into a bank a try too.
Yeah. And that was sort of the edge that we were working towards, is to say, hey, if we can help you understand your earnings, can we also help you manage your earnings through a better account experience, so you don't have to jump through.
And that's what I was going to say. A lot of people who have like Gridwise or some of these other apps, they don't optimize everything that's in there for them. They're just kind of like, I just want to see this and this, and there's like 1,000 things you could do. But I imagine that with your app, people very much want to see everything, because they're like, dude, this is my money. It's all my money in here.
And the good thing about that is that we've been able to like build like positive like partnership relationships. Like we've done some work with Gridwise, because we're not competing with them on the use case. We're saying, hey, we'd like to offer an account to gig workers, and you're offering some sort of like insights and recommendations.
Why rewrite their algorithms and
so
code?
A Gridwise user can discover moves through Gridwise, and then all of a sudden they become a moves user as well, right? So I think there's lots of opportunities for us to work with other companies that are going after the same user base. So
that's awesome. So where are you based out of anyway?
I'm based in Toronto. I'm in Canada, but the product that we've built is exclusively available in the US. We had like dabbled with the idea of launching a product in Canada as well as the US, but we ended up only focusing on the US. So, but the team is pretty distributed. We're pretty spread out at this point, but we're about 35 people working on this full time.
I won't get political. Was it just because Canada and its politics and the way that they're handling the gig economy right now is?
Partially. I mean, partially there exists a more default safety net in Canada and not just for gig workers, but for any like a publicly funded health insurance would be a good example of that. Right. Where, during the pandemic, there was a relatively regular monthly check going out to anybody, and gig workers were eligible for this check. So you can get $2,000 a month from the government throughout the majority of the pandemic. And that was like pretty well established. Canada is a little bit more, there's more government funded safety net systems, right?
Yeah, I'm real familiar with Canada, and I actually love Canada too. um, but I got to say that I was curious because I know that I see a lot of the regulations that like AB5 type things, and even if it's not specifically that, there are other ones just moving everywhere. Vancouver, Toronto, like they're really trying to push it hard and quick, and because of the way that the government is a little bit different, and I'm not saying worse up there or whatever, different. I could see those things going through quicker and making.
I think that's probably right. I think there's often like they overlook some of the potential negative side, like consequences of passing laws too quickly that have been fully considered. I think AB5 is a good example of that. I mean, the speed at which AB5 turned into a ballot issue with Prop 22 was just a prime illustration of just having gone quickly and not having fully considered all the side, like the edge
crazy quickly.
Yeah. And then a lot of it had to be overturned with Prop 22, and now Prop 22 is being debated in court. And like, it just all to me just shows that it was more political opportunism than it was thoughtful legislation, So hopefully jurisdictions at the state level and wherever, depending on different countries, it'll be differently governed, but they take their time trying to get this right. There's new laws now being debated in Massachusetts, and New York City just passing new laws, and I'm sure.
Oh man, I'm gonna send you only one podcast of mine when we're done with this, which is the one I just did with Kim Cavan and Lisa Rothstein, and all the no AB5ers, no PRO Act, no Massachusetts H1234, no New York bill. No, Kim is the one who defeated the copycat legislation of AB5 in New Jersey. It's amazing, and there's a lot of info in there, but I'll send it to you. But so right now people are tying in their accounts. They're learning things probably about themselves. They're learning where their earnings are coming from, and they probably see breakdowns of, I don't know if they've see hours and things like that on the banking side, or
it's coming. I mean, right now we show you a summary of your earnings, but like hours and rides completed and other sort of data points.
But you can at least see, like, if, like you were saying, like when you want to see where you've hit 1,000, you can at least see where the income's generated from which of your apps that you,
and it will also show you like when your expected payouts are coming from which app on which day and how much is coming. So you'll know, on Thursday, I'm expecting a deposit of so much money from this app. On Friday, I'm expecting another deposit. So we'll give you a view into like your upcoming deposits and how much you should be expecting in cash, so that how much you've earned, how much you've already been paid out in your daily payouts. Or I think sometimes it's easy to lose track of how much you've been paid and how much you have yet coming towards you based on the hours that you worked in the week. So we just try to make that easier for people to understand their cash.
Yeah. So knock wood that this doesn't happen, but let's say that a driver got in an accident today.
Sure.
Same thing we were talking about. They need $500 quick.
Yeah.
They're not signed up for moves yet. They call you and they're like, Matt, heard you on Rideshare Rodeo. I need one of those $500 things. How does that work?
It's I mean, it's a tricky question. So historically that driver would have been eligible. And the first version of the cash advance that we put out in March was effectively, if you could prove to us that you had historically earned consistent income as a gig worker, then we would approve you for an advance. Well, what we found along the way, fortunately, unfortunately, depending on how you look at it, is until we actually had you onboarded into our account, the ability to like actually build an automated repayment system where we were pulling money from a third party account. Let's say you banked at, you had the Uber debit card, or you banked at Chase or whatever. We had to pull little bits of payment from multiple accounts where we didn't have direct control over the account itself. And so often what would happen is that we were creating NSF charges in the user's account because we would try to pull a payment on a Wednesday, let's say. And what happens when you're using these payment rails, the payment rail we used was called ACH, is the payment would take 24 to 48 hours to process. And so we would pull a payment on Wednesday, knowing you have cash in your account on Wednesday, but it wouldn't actually pull out of your account until Thursday or Friday. And you may not have cash in your account on the Thursday or Friday. And so you'd get hit with an NSF charge from your bank because we had tried to process a payment without sufficient balance. And so there was a lot of these little inefficiencies that existed. So until we had people on our own account infrastructure where everything can be done in real time, like we can fund your account within a second and we can pull a payment in real time when you're on that schedule for repayments. And so those risks don't exist, and we will never charge an NSF fee to a user using our account. So we took away that concern of like, oh, I'm going to get hit with a $35 NSF charge or an overdraft charge or whatever the case might be. And so we stopped doing that in October. We effectively said, hey, you need to be an account holder. Once you've been using our account, if you were to get hit, get into an accident, well, now your historic income, you've been pre-approved for an advance. That's the exact use case we're trying to cover. We're trying to cover what we've been calling like these unexpected expenses, like your bicycle got stolen and you use it to deliver food, or your
no, I love that part. I love that part. I think it's great.
And you're effectively pre-approved. It's almost like having access to a line of credit where the amount is there, and it's just when do you need it, you pull it, and then we'll pull it back from your account as you start earning again.
I guess then my point becomes, knock wood again, hopefully nobody gets in an accident today. And if you're hearing about this, sign up for Moves now, so that if you do get into an accident,
yeah, we used to call it like,
is that right? I mean, you kind of have to onboard first.
Yeah. And that's one of the benefits of being a Moves member is this, we even used to market it this way. We used to say, hey, we're trying to provide you peace of mind. If something bad happens, you can have the peace of mind that there is a amount of money available to you that you don't have to jump through any hoops to get. It's just automatically there. One click, it's in your account. But to get to that peace of mind, we need to get to know you. We need to have sort of a good understanding of your historic earnings. And we need to know that you're like actually working as a gig worker, because that's the demographic that we're working to sort of serve. But beyond that, we also want to make sure that we're providing other values in the account by making it easier for you to not to have to like move money between multiple bank accounts. We're working on a perks program right now that'll drive like cashback rewards on things like gas purchases and things of that nature to make the account just a better experience for you in general. Mm-hmm. And then more recently working on this stock program where we're starting to give stock to gig workers as another sort of a sweetener to the deal to make it interesting for them to start participating.
Awesome. So if people hear and they do sign up, it's not one of those things where, you can be in an accident and be calling people and saying, hey man, I can't find the money. And somebody has a Moves card that, in the gig world. And they're like, well, dude, just call a Moves card. You're not gonna be able to get it in that process. So just get the process going is what you're saying, and see how you like it. Obviously it would be, a great thing to have. Is there a limit?
Well, the other thing that's worth noting on that is the way that we provide the advance to you. So let's go to that unfortunate situation again, where we have a Moves member. So presuming that they've already onboarded, they've already created their account with us.
Which takes how long? Just curious.
Like to
like if I fill it out after we're done with this conversation.
Not more than a few minutes. I mean, it's an app to download, and it depends on how many apps you're connecting, because you're going to be connecting your Uber app and your Lyft app and whatever.
Right. I meant for you to activate me.
Oh, usually it's automatic within your first session.
Okay.
I mean,
okay.
In 90 to 95% of cases, it's automatic. You click, I want a bank account. The bank account's approved. In about 5 to 10% of cases, we have to follow up and request. And this is not driven by us. It's driven by our banking partner. They'll say, oh, can you follow up and ask for a picture of a driver's license? Or can you follow up and ask for some additional, they need something to prove your address or something like that, right? So, but that's usually about 5 to 10% of cases. And we'll try to get that resolved within a day. But in 90 to 95% of cases, you're approved automatically within the app. So when you're applying for the account, we're going to ask you for your address, your phone number, and your social security number. And if you don't have a social security number, we also accept another form, a passport number. But so anyways, that process usually spits out an automatic, you have an account. From there, you can decide, do I want to switch all of my direct deposits? Do I want to switch only one of my apps into Moves? You can decide how you want to manage that. It's all very like custom to you in your profile. But what I was going to say is that the nature of that advanced product, the fact that it's not a loan. So that means we are not checking your credit score. We're not reporting to the credit bureau if you miss a payment. There are no penalties. There are no late fees. There's no interest rates. We're charging you a flat service fee. And so the flat service fee that we charge is 3.5%. So if you wanted $100, you'd be paying us back $103.50, no matter what. If it takes you twice as long to repay us, it'll still be $103.50. If you need to stop making payments for 5 weeks because you're injured or sick, we'll just waive the payments for 5 weeks and get you back on schedule. Like, we make it extremely flexible to make sure that it's sort of like adjusted to the realities of just day-to-day life as a gig worker.
And you see that as a scalable growth thing too? that
Yeah, because what we're
even
finding
as you
on the
grow, you'll
flip
still be
side,
able to help
yeah,
people on that level?
yeah, absolutely. Because on the flip side, there's various profiles of people. On the flip side, we've got users who will borrow $100 just to speed up their cash flow for the week, and they'll pay us back next week, right?
Mm-hmm.
And so the option is always there to pay us as quickly as you want. But the
Sure.
option is also there to say, well, I need a couple of extra weeks because I'm sick, or my car's still in the garage and I just can't earn this week, or whatever the case might be. So we'll just easily waive those payments for the week. And so we provide flexibility to make sure, and generally the users that are paying us back quickly are effectively making up for the users that are having delays in their payment schedule. And it all works out pretty well.
So here's a question. For somebody like me who works a lot of gig platforms when I'm here in Denver, um, and then I work for the second largest laser company in the world, who, when they use me, they whether it's graphics here or doing, we have all the Carnival Cruise Lines and all these Disney resorts and some of the biggest clients in the world. If I put in my direct deposit for that company, is that okay too if it's outside of the gig realm?
I mean, you can
Does it get measured into all the things?
It won't get measured in for the cash advance, but
no, not for the event advance, just helping me understand. I do understand, but I'm saying for people that might be in a similar instance, because there are a lot who have a different gig job that isn't an app based.
You know what? It's a good piece of feedback. It's a good feature recommendation.
Because like with me and the laser company, I could tell you this, you'd never have a second client like me. So I know that like you have 15 that you work with that you can instantly connect.
We can have a bucket that says other income.
Right. That's what I was going to say. Could I do it so that I'm saying, hey, I have you're not going to have any more of these people, but what do you need from me?
Yeah, no, that's actually a really good piece of feedback. I'm gonna take that one back to the team. I think that's, because functionally from the account's perspective, you could put whatever income you want into our account. You can use it as a standard bank account for whatever source. You can deposit checks, you can deposit cash, whatever you want. I do think it would be interesting to sort of,
but that's how they pay me, and that's how that's how even other like I do a little computer and other consulting too, and some of those can pay me that way. Like, so really, if I get all of it, even though those aren't on-demand app-based gig platforms, there's still the way that I gig my life.
Yeah, I know it's a good point. Yeah, no, I'll take that feedback back to the team. I appreciate that. I mean, this is part of the fun of being, like I said earlier, right? Part of the fun of like discovering problems and requirements as we talk to users, and it lays out our roadmap for us. So all of a sudden you just gave me an idea that probably gets added to the roadmap in the next couple of months to work on. So
you're right. Because I mean, that would attract me more, because I'm like, especially like, if I'm, in between things or trying to learn, if I'm at that point in my life, I mean, I might not look at, maybe I do, but I'm 49. So I've been doing this for a while, but
you look 39, Steve.
Thanks, buddy. Thank you. But so maybe like if you're in your early 30s and you're just kind of trying to really get a hold of this kind of stuff, or late 20s, and you're like, okay, I'm past all the other stages and I've got all these incomes, I think that you'd find a lot of gig workers have other gigs, not just a W-2 on the side maybe, and do 20 hours, but you'd find that a lot of gig workers who work 20, 25 hours, the other time they're doing is coming just from other gigs too.
Yeah, no, it's a good point. Yeah. I'll definitely surface that with the team. That's super helpful.
But so can we talk about, I mean, I'm very interested in the path to ownership, or and how that'll be done, because these companies are so viable in their worth. I mean, is it going to be like more like a mutual type?
Yeah,
you're invested in all of the gigs, and that way it kind of keeps it balanced.
Well, this is the way I've been like describing our business when I'm describing like what it is that we're trying to build. I often use the term credit union as like an example. And it's, something analogous to a mutual. I like the analogy of a cooperative, where we're pulling together people that are going to share ownership in something that matters to their livelihoods. And so in our context, that cooperative is pulling gig workers together and effectively enabling them to not only individually acquire ownership in a gig company, but also collectively grow the leverage that workers have as a group over these companies over time. So This is where you'll have to like take a little bit of a leap of faith with me, but the math starts to add up really interestingly when we can start by giving one gig worker $100 of stock in Uber. Okay, that's not that interesting. I mean, it's interesting to the guy who just got $100, but if I can do that across 1 million gig workers, and if I can give you not only $100, but I can work you up to $1,000 over time as you consume our product, then all of a sudden I've got a very significant user base of gig workers all accumulating ownership in stock. I'm using Uber as an example. We can do
right.
this
So okay, I'm just trying to decipher this for the listeners a little bit. So basically, now I guess I'm understanding it a little better. So it would almost be you guys buying the stock for them in their name, based against other usage for using moves.
What we do in the product today, and this is an invite only feature because we're still testing out the like infrastructure behind it, but effectively we've got a couple of hundred users doing this right now in this alpha program that we just launched. We open a brokerage account in your name. It is available to you through the Moves app. So the same way you would see your bank account in the Moves app, you would see your brokerage account in the Moves app. Your brokerage account is pretty simply a way for you to earn a reward that we pay for, denominated in stock that we're putting into your account. So when we fund you, let's say $50 of Uber stock, that legally belongs to you. If you decided to shut down your account tomorrow, it's your $50 of Uber stock held in a brokerage account under your name. We're going to run those rewards based on different activities and behaviors. So the first one that we started with was like, we're trying to activate and onboard new users. Say, hey, if you onboard with us and you move your direct deposits and you start using Moves as your bank account, we're going to give you $50 of stock. We're going to try to make that stock as closely reflective as like where you're earning your primary income. Right now, we're testing that with Uber stock. We're about to roll out Lyft stock, Grubhub stock, and DoorDash stock as well. So that if those are, and then eventually it'll be that you can earn a basket of stock. So if you're 50-50 Uber or Lyft, then you could earn 50% of your reward in Uber stock, 50% in your reward in Lyft stock. And so we're going to continue finding ways. We'll probably roll out versions of that. We call them tasks, where we put a task in the app, and if you accomplish the task, there's a reward associated with that task. The first task is like onboard, create an account, move your direct deposits. Another task could be refer a friend, earn $10 of stock, and your friend will earn $10 of stock, as part of their onboarding experience. So,
right, like I just had that happen to me the other day on Robinhood or something.
Yeah,
I referred a friend, and I forgot I had even done it, and then I had this like I think they gave me stock. They didn't give me any money, and it wasn't a stock I get. They're just like, you get $10 of this. I'm like, all right. It was like 1.5 shares. I'm like.
Well, and so the difference, legally speaking, what we're creating for a user is analogous to Robinhood in the sense that we're creating a brokerage account. Functionally, we're not creating an experience where you can go buy and trade stock.
Sure, right, I get that.
The only two things you can do with this stock is you can earn it by completing these tasks. So it'll never be your money. It'll always be us giving you dollars of stock. Generally, if you do something like refer a friend, that's worth something to us as a business because we don't have to then go and spend dollars on marketing to acquire that user. And so you just gave us a new user. We're willing to give you the money that we otherwise would have spent on marketing to get that new user, right? So it like directly ties into our business model. And so we'll give you stock dollar value, and then you have the ability to earn it. And if you want, you can sell it. You can't buy more through your account, and you can't trade for stock that we don't support. We only support stock in gig economy companies. We are debating right now. It looks like we're probably going to add support not only for Grubhub, DoorDash, and Lyft, as well as Uber, but we're also looking to add support for Amazon, for Flex couriers, and Target for shipped couriers. So we're trying to find ways to make it as closely linked to like the apps that you're working on as possible.
I mean, that makes sense. So is there any correlation as to, or even if it's not now down the road, where it's like if you're driving Uber, you're going to get Uber shares?
Yeah, that would be the.
I mean, does it have to be that way even once you're working with all of them? What if you're like, I only work for Uber, but I hate the way that their portfolio performs, and can I have it in Grubhub?
It's a good question. I mean, we may start to provide.
And again, I'm talking way down the road when you've got a locked relationship with all these.
There's two scenarios that I could foresee, and I'll say this with the caveat that regulation around stock and securities law is complicated. So don't take me as a lawyer here, but there's two scenarios I could foresee. I could foresee a scenario where we let you choose the stock you want. Do you want Uber stock or Lyft stock or DoorDash stock or a combination of them? because we're doing fractional stock, we can give you like 10 cents of a stock. We don't have to give you a full stock worth of value.
Right. That's why in the beginning I asked you about the, like what you referred to as the basket, which I've heard before too. But
yeah,
you know, like could it just be a pool of the stocks?
That's the other way that we could do it. We could organize this more as a basket and say, hey, everybody's getting exposure to this basket. I mean, in the stock markets, you know, people that are familiar with the stock markets would be familiar with things like ETFs, which are effectively indexes. So they're like a stock that represents a basket of stocks, right? So we could say, hey, we own a basket of stocks that are Uber, Lyft, DoorDash, Grubhub in some proportion. And what we're giving you is ownership in that basket. I think there's a lot of steps that we would have to take to do that, but that ultimately would be a really interesting way to do it. To say, hey, we're all growing our portfolio as the gig economy grows, whether or not Uber wins or loses or Lyft wins or loses, it's just like, what's the overall value that's being created?
So like if somebody worked in current scenario, let's say like me, and let's say you had been around since 2014. Okay, let's just imagine this for a minute. If in 2014 I signed up with you with my Uber account or my Lyft account and my Uber account, or just my Lyft account, let's say, and then just today there was big scandal, there was no sellout, it's going to be sold for pennies on the dollar, Lyft goes out of business.
Yeah.
What happens to me? I lose all my I lose all my Lyft shares.
Yeah, I mean the shares are your shares, and there's market risk.
I mean, I know again that's an extreme scenario because companies merge, they become worth something, but not as much, maybe.
Yeah,
but
I mean, I think the opposite version of that story is what I find interesting. Is saying, well, what if in 2014 you earned Uber stock? What would it be worth today? You know, so we're that to me, and Uber played around with this concept years ago around the idea of
I guess my question was a mute point because you couldn't own that stock then.
Yeah, because it was privately held at that time, right? So, you know, we are limited by the fact that they have to be publicly traded stock.
Right.
You know, so if Instacart decides to go public, we may add support for Instacart stock for that community of gig workers, right? But we do have the stock has to be available on a public market because we're buying it from the public market and putting it into your brokerage account effectively.
But even like if they chose, that still becomes a security issue. If it's, hey, I only work Uber, but I'd really like to have my money in DoorDash.
There's some nuance that there's two sort of like licensing requirements in the security space. So there's one that's called a broker dealer, which is the ability to open brokerage accounts and execute trades for users. The other one is called a registered investment advisor. A registered investment advisor is where you have to be careful as to not making implicit or explicit recommendations on where you should be putting your money as an investment. If you're recommending a stock, then you have to be licensed to do that, and you have to be making it very clear to the user. And recommendations are not always explicit. The rules are gray enough that like there are implicit ways that you could be like seen to be recommending. I think things like pick your own stock tend to be okay, but there are ways that you might surface that where it sounds like you're trying to nudge somebody towards Lyft stock instead of Uber stock. Then all of a sudden it feels like you're implicitly recommending something. And then you fall into this like whole licensing question, like, are you regulated to do that? That's where you start getting into trouble if you're not careful.
So this is almost like some of the startups that are happening with portable benefits, but it's portable stock.
Yeah, totally. And I think
so if I know a lot of times people just, you know, they move on from an Uber or something. Let's say they just work one again and they move on to a W-2 job and they're like, yeah, I'm done with Uber. And they've done it for 3 years on your platform. They've got that earnings. Do they have to close that out with you?
They don't, not necessarily.
Or can they leave that Uber stock ownership under your?
Yeah, totally. And
where
their account with us stays available to them.
Even if you're deactivating your account.
Yeah, but there's two different pieces there. I mean, you could stop sending us direct deposits and the account is still there. I mean,
right. But I know some people who get to I know a lot of veteran drivers who get to the point of, I've had enough. I'm not just temporarily turning off, and they call them and say, deactivate my account, delete my data. No.
Yeah. You mean at Uber?
Yeah. Or anywhere, any of the gigs.
No, I mean, and so there's 3 things in our account today. There's pulling data from your Uber profile. Let's say you stop having an Uber profile. Okay, there's no more data to pull, no problem. You have a bank account with us. You could keep that bank account open. You could close that bank account. Also, no problem. You choose it doesn't have to be linked to whether or not you're still working for Uber. If you're not working for Uber and you want to keep your bank account open, you can keep it open. Then you have a brokerage account. You could shut down your bank account, shut down your Uber profile, and still maintain your brokerage account. So like none of these things, there's no scenario where we would like deactivate you and kick you out of the app.
Right. I mean, and because you're and even if you are going to that length, and again, it's not, I think a lot of my listeners know this too, it's not that uncommon. It used to be. People used to just say, I've had it, and they would just delete the app, not ever call Uber and say, I'm done. I'll never do it again. Take me off. But they used to just delete the app and they'd bring it back if they came back. But nowadays it is way more than I even thought, as I keep getting around and talking to people, and they still work other gigs, but some gigs they just don't trust. And because of security reasons, they've like, I call them, I shut it down. I've followed your advice. If you go through that, to ask them that all my data be removed. You know, because we've even got like a little scripted thing up on Uber Lyft drivers that tells you exactly what to say if you're going to call those companies that, where I was given this by Argyle.
Yeah.
They said, have them read this.
That's smart. Yeah. But from our perspective, it doesn't change your access to your
right. Because you took the stock. I mean, not you, but Moves got the stock for them for doing other things.
Yeah.
In that. So that doesn't matter. That like, it's like me, if I never worked for Uber, I could still own stock in Uber.
Of course, yeah.
So they're still going to have that stock.
You could have a brokerage account that owns stock in Uber, irrespective of whether you've ever driven through Uber.
Because the follow-up to this was, what happens if you get deactivated? So that you already answered it now.
Yeah. I mean, I think problems like deactivation are worth addressing, but they're different, right? These are problems that are Uber problems that drivers and Uber have to interact over. And maybe
I meant like somebody who's like, now that's why I was bringing it around, like who's for 3 years driven, does 8,000 rides a year for 3 years, and out of nowhere, which happens a lot, deactivated, and they've been earning Uber shares with you.
No impact on their access.
Right. Again, I think
their bank account is still completely accessible to them, and their brokerage account is still completely accessible to them.
Right. And then we refer them to Brian at Legal Rideshare. He gets them reactivated, and everything's good.
Totally. Well, better yet, I mean, I think this is where I'm sort of going with this concept. I mean, we call this stock program the Moves Collective, and the reason we call it the Moves Collective is we're trying to show that if we grow the number of users that own stock, we can actually start to have more influence on the way these companies make decisions, because we're not just a group of gig workers, we're a group of shareholders, and we're a group of shareholders that's growing in economic value. And so if we can show this like trend line where gig workers individually are accumulating more stock and more gig workers are joining the group, then things like deactivation actually become topics that we can address directly at the source. I mean, not to give away the specifics, but we're going through a process right now with Uber to submit, materials to make recommendations to their board of directors. And the reason that we're able to do that is because we are shareholders of Uber. And so to be a shareholder gives you rights. And if you're a larger shareholder, you have larger rights, right? So if we're a group of shareholders, we should be able to grow the rights we have to demand things of these companies. And so, you mentioned labor unions earlier on when we were talking about AB5. I don't love the analogy to labor unions, but there's an aspect of what we're trying to do, which is if we can deeply understand what are the problems associated with being a gig worker, then why shouldn't we advocate for changes to those problems? And if we have
changes, but not unions.
No. And so, but changes through a mechanism that says, let's give ownership to gig workers, and then let's collectively pool that ownership to say, we have a voice that we can use to vote on things. We can use to try to influence these companies in our direction. Because now we're a group of gig workers that owns 1% of Uber's market cap. I don't think that that's an unfeasible number in like a very short time frame. And that's billions of dollars of value that we can start to pull together for gig workers to get access to.
So yeah, I mean, it kind of reminds me of some stories I've been doing on the UK, where they actually created, they didn't do the full unions, even though it's kind of turning into that now. But I've had a couple people that I know that drive and work the gig economy over there on, and they actually created, employee gig worker or employee independent contractor and then worker class.
Yeah, the third class. Yeah, I saw
that. And that I kind of knew when that happened, that's going to turn into unions.
Yeah,
like even though it's supposed to be especially in the UK, for people that don't know, it's like almost every employee is in a union.
Yeah,
It's not like
a
here
different
where
yeah,
employee means maybe
different culture.
union, right? It's
Yeah.
everybody's in the unions. Um, but it's crazy because I thought that middle class was gonna be kind of the new revolutionized, old independent contractor type self-employed model, and I thought, okay, they're gonna finally deal with this, call it something, and still keep it independent contractor. But I think we're seeing it play out there where it's going the other way, which is what a
Yeah.
lot of us
Well,
expected.
and that's what I think Uber has talked about in the context of Prop 22. They were calling it IC Plus, right? The Independent Contractor
Mm-hmm.
Plus, which was like, we want to maintain the flexibility and the independence, but we also want to provide certain protections and benefits and things of that nature, but without attaching the term employment to the relationship. And I think that the solution does exist somewhere in the middle. I just worry that the political answer always leans towards unions, which are the wrong answer. I don't think labor unions are a productive tool in the context of the gig economy, let alone, your views on how they apply in other parts of the labor market. But it's just probably the unfortunate reality. Unions have a lot of political influence depending on the state or jurisdiction that you're in.
For sure they do.
And so we just need to provide an alternative. And I think an alternative is get gig workers to come together more organically through something like stock ownership. And they can start demanding things themselves. They don't need a group of people like a union to sort of like stand on their behalf. So that's where we think that there's an opportunity for us. And then long term, what I love about it is that a gig worker who owns stock in these companies starts to feel a sense of like deeper economic alignment. If these companies succeed, I succeed. If I work longer, I earn more. Over the course of a few years, that can become a meaningful amount of money.
Yeah, absolutely. I mean, I'm not sure exactly where in the process you are to that point, but you definitely
the stock earning piece is live. It's real. It's just limited in terms of like how broadly available we've made it. It'll be public in the beginning of 2022. So right now,
so you're keeping it more to like the beta group just so you can
and you can request to be part of the beta. So if you're a Moods member today, like there's a screen in the app called the Collective, and you can say, I want to request early access. And we're pulling our invite lists off of people who have requested early access. So when we're inviting the next batch of users, it's from that list of people who have requested. So there is a way to get in earlier just by being a member and requesting.
Sure.
But it'll be like a publicly available feature sometime early in the new year.
Awesome. But I mean, yeah. So I mean, I'm shocked you're that far already. To
Yeah,
be honest,
I mean, we're a big team. We're working night and day to solve these things. So
yeah, but this is I love it because I'm my role at Para is driver advocate, so I'm on the phone all the time. I'm emailing, I'm dealing with people either yelling me or loving me.
Yeah, well, we've got our fair share of that. I mean, we've got something we call our member support team, which interacts with our members who are all gig workers. So, and to your earlier point on transparency, just to give you a sense of how this works, we're funding these purchases of stock by revenue that we're earning, and the revenue that we're earning is associated to what's called interchange revenue. So when you're using our account, it doesn't cost anything for you to use our account as a gig worker. But when you swipe that debit card at Walmart is paying a processing fee for that debit card. We're earning a fee there off of the merchant, right? So every time you swipe your debit card, whether it's a Chevron gas station or a Walmart or Chipotle or whatever, we're earning a fee off of that swipe. The user will never see that fee. It's free to the user.
No, I get, yeah, I get
merchants
it, what
are paying
doing.
a fee to process that card. We're earning a part of the card processing fee. So when we earn that fee, and it tends to be somewhere just between 1.5% and 2% of every transaction that goes through a card is revenue to us. We take that revenue and we turn it around. We buy stock, and then we give that stock back to our users. So, this is what I loved about the credit union narrative. The credit union sort of like analogy historically had been that when credit unions generate margins, they return those margins to their members through lower fees or dividends or some sort of a benefit or advantage that you wouldn't get as a customer at a bank. So we're trying to find ways to do something similar where when we have a margin generated in the business, we can return it to you in a creative way. And stock is just something that we think aligns really well to sort of the mission of the company.
And even though you're safely handling people's data, you are not in any way using data for other things. And in fact,
No,
I think you just answered that.
There's no part of
I just
our
want
business
I just want the listeners to hear, because they know I don't ever, I'm not somebody who's like does these interviews and is out to ever get anybody. But if they tell me that they're earning money off people's data,
Yeah.
I'll
No,
go,
there's
I'll get lit.
absolutely no data. There's no data monetization in our business model. So the only thing we do with the data that we consume is we show it to you in the app, or we
Right.
use
No,
it to
and
make
yeah,
decisions on things like cash advances.
there's a level that you have to have it, but I just meant monetization, or specifically selling. One day somebody, and watch, they're going to steal my idea right here. Hopefully it's you, man, since I'm giving it to you right here free. Is that somebody needs to create an app that shows exactly, you can put your info in, same type thing, you log in your accounts and it shows where they're selling your data to.
Yeah. Yeah,
So like you plug in Uber and it says Uber gave your data in the time period you selected in your filter. Uber gave your data out this many times to these companies.
Yeah. Yeah, I think there's going to be a lot of pressure to move in that direction over the course of the next few years. It's definitely a topic that I think a lot of companies.
It is definitely a topic, and
with
the PRO Act on the table, and I know, I talk to people all the time, and you seem to be, because you knew about the other states too. You seem to be kind of more on my level of understanding, because I try and explain it to as many as I can, but we're a lot. It's sad because we're a lot closer than people know or would expect to some really horrible legislation.
Yeah, I agree. Yeah,
I mean, the PRO Act, the PRO Act is so close. I mean, it's so close to it could be passed. It's scary and nobody knows it. And then you talk about AB5 and it's already happened, and some people aren't even aware of that.
Yeah. And the direct impact it might have on the way you earn a living, and the how much you depend
59 million. That's 30% of the American workforce.
Yeah, no, it's pretty aggressive. And we've got, we have no choice but to sort of pay attention broadly, because we've got users in every single state in the country. So if there's something happening in North Dakota, I've got to be familiar with it, because I've got, a handful of users in North Dakota. I won't promise that it's our biggest user base, but and various states are sort of approaching it differently, and hopefully that leads to some lessons learned from the mistakes of AB5 and the mistakes of what's happened in New Jersey, and there's lessons being learned in Massachusetts right now that are going to lead to bad outcomes. And so, I hope that the states that are waiting to see are going to learn from the mistakes of other states, but
I think they are. They already are. And we've had a few discussions, but this last one was very informative. So all people are turned on to this now, the right people. It's just the workers that don't get it.
Well, and
and not don't get it. They just don't. They don't even know it's a real thing.
No, they're not paying attention to the specifics. And I think that's why services like what you're doing with UberLiftDrivers.com is so important, is just to have a place where you can actually understand the latest of what the discussions are about. What are the latest legislations that are being proposed? In New York State, there is a surcharge applied to every food delivery that happens on an app. And that surcharge is intended to fund benefits for delivery drivers. But hey, sorry, I cut out there, Steve.
That's all right.
I was just saying in New York State, there's this surcharge on food delivery that exists at the state level. So if you order something on DoorDash, you're paying the consumer is paying a surcharge.
Right.
The surcharge is intended to fund benefits for the food courier. Most food couriers in New York don't even know that it exists. There is an available program for them to get access to some amount of free benefits paid for by this surcharge. And the average food courier has never even heard of it before. So it's just like, how do we surface these things? Like, debate the merits of that tax all you want. It exists, and people aren't taking advantage of what it's supposed to represent, which is a benefit to couriers, right? So we hope that we can sort of play our role and
I think the New York TNC needs a complete overhaul. I mean, right now with the shortage of drivers, and that they're looking at taking on the medallion cabs for a year. I mean, come on, we know exactly what they're going to do. They're going to learn the cab logistics, and they're going to offer them pennies on the dollar when it's over.
Yeah.
It's just crazy. And I don't know, New York is the worst example. I know a few drivers there and people who work gig, and it's just awful. I mean, they just are trying all kinds of things, and even things like you mentioned that are already in place that they're never going to tell you about. But even the
Well,
regulating
yeah,
companies behind it, that, New York's a lot of the gig economy isn't regulated in any way, but in New York, it kind of is. And it seems like that's the one place that should be telling you this stuff. And we're learning that the one place that is kind of regulated in the country isn't telling you what you need to know.
yeah, yeah. It makes you pretty cynical about the purpose behind a lot of these legislations, doesn't it?
Yeah. Well, I'm excited to see what you guys do. I'm gonna sign up. I don't know. Maybe I'll just connect my worthless Instacart account and see what it does. I don't know.
Well, we're having a different issue with Instacart
Okay. Me too.
we'll probably end up having to get our Instacart users to help us with this one, because I think I've learned that with some of these companies, the only way to get their attention is to like bombard them with hundreds of like request emails or service tickets or
Oh, I can be that guy for you. If just tell me what I need to do.
well,
And
Instacart has a very specific problem that we're trying to address. When you're familiar with Argyle, so we use Argyle to do the sort of data aggregation from these apps. Every time we pull data from an Instacart profile, it automatically logs the user out of their Instacart app every single time. And so when we do that on Uber, on DoorDash, on Grubhub, that problem does not exist. This is a uniquely Instacart problem where they've created this security mechanism that says if there is a service trying to pull data from your app, we will log you out, meaning an Instacart shopper gets kicked out, stops getting push notifications about the next order, doesn't know. So they've created this, like, I don't even know that they've done this intentionally. It's just the way that they've architected their login system. And so we've got Instacart users that have to, like, every time they sync their moves profile, they then have to remember to go back to their Instacart app and re-log in, which is just a really crappy experience. So we're trying to address this. We're talking to the team at Instacart about it, but frankly, it's probably going to take hundreds of Instacart shoppers like sending emails to their service desk saying,
that's why I'm the perfect guy. I've done one. I've done one. I can contact him and be like, okay, I did one. Until you can do this with moves, I'm done.
Yeah, there you go. Yeah. No, we need more people like you, Steve. That's exactly. And I love this sort of like grassroots campaign concept of just getting people like working together on things like that. So,
well, it was really great learning about this. On the website, you definitely don't see, or at first glance, you don't see a lot of where you guys are going. You see great things, but I'm really
what I'd
interested
encourage you to read, and I'd encourage your listeners to read, is there's a section on the website called Our Vision.
Okay. Yeah.
And I dive in pretty deep there into sort of
I'll put that link for sure. Maybe I'll put that instead of the landing page, or I'll put both, but I'll put it above the landing page.
Yeah, I love it, because that'll give you a good sense of like where the roadmap is taking us and what the ultimate aspiration is.
Yeah. By the way, let's before we end this here today, let's let you plug any socials, your website, whatever, so that people can find you.
Yeah, sure. I love it. I'm personally, I'm most active on Twitter at Matt Spoke, MATTSPOKE.
Okay.
Obviously, Moves is on Twitter as well. Moves Finance, movesfinancial.com. You already mentioned, and then we're available both on iOS and Android, so users can find us on whatever.
No Facebook, no Instagram.
Yeah, there's a Facebook group. We're starting to like dabble a little bit with some like TikTok and. We're testing pretty much all channels, but I'll say that the primary ones that we rely on tend to be Twitter and our website, and a couple of other places. But people can find us on most social platforms.
Are you on TikTok now? Just curious.
I am personally on TikTok as a passive observer. I can't say I've like.
I used to be the passive observer too, but now I kind of do these 15-minute little briefs, either plugs for other podcasts or other things.
We've done a little bit of campaigning on TikTok.
I'll give you guys one as well. I was going to tag you into it, but
yeah, Moves definitely has a TikTok profile.
Okay,
I'd have to like send you the actual tag. But we've done a couple of little like video campaigns on TikTok where gig workers can like upload a story of a tip or a good experience they had, and there was a few months where we were giving away $200 a day to gig workers who were sharing stories on TikTok with us. We were like testing this out as like a campaign. So we'll probably do more of that type of stuff in the future, but we just, we're still learning.
But all the other socials, can I find them on your website just so I can put them all into the show notes?
Yeah. Facebook, Instagram, Facebook, Twitter, and LinkedIn are on there. And I can get you TikTok as well. And but they're on the bottom of our webpage.
Yeah, if you could even just link the, I mean, you can just link the TikTok one or send the TikTok one to me if you don't want me linking it. Or if you do want me linking, that's fine. But I was going to tag you in one because I do, I just like doing them. I just did 3 for Jason Thierry. I told him it was the trilogy.
I'll send you our TikTok profile.
Okay. Cause I mean, I only do the 15-second ones, but I make them pretty funny. And I like always give a plug, like, why aren't you on this? Get on this.
Yeah, I love it.
What are you doing?
Maybe
I'm not an influencer. I'm a pusher. Like, get on here, man. But thanks again for your time. This was a great conversation. David said to say hello. I'm guessing that you're giving him back a hello, and I'll pass that along.
Yeah, please do. David and I are probably overdue to catch up, so it's a good reminder.
Yeah, he said it was like 8-9 months ago, and he was like, "Oh yeah, I know." Like, so it's not, I even got from his tone like he was like, I should shout out to him. And I was like, yeah, dude, why don't you?
Yeah.
I mean, he has been in Hong Kong for the past 5 weeks, and he spent 3 of those weeks in quarantine when he first got there.
Oh, wow.
You have to stay in a hotel. You're not allowed to leave the room.
Well, he's back now, though. So
good time for me
to get back on his
for about
calendar.
3 days. Yeah.
Sounds good.
But yeah, thanks for your time today. And let's absolutely stay in touch for sure.
Definitely. Good meeting you, Steve. This is fun.
Yeah, good to meet you too. Thanks.
Take care.